What's going on? 7 o'clock. I hope everybody's doing very well. We're getting ready to get started in 1 second. Let me go ahead and make sure that Instagram is placed on. And then after that, we'll go ahead and get started. If you're here, please make sure that you end up dropping in the comments. Say, hey, I know it's early typically. Obviously, I end up getting most of my clients at 8:30 to end up watching this, but let's go ahead and get started. And we are live. This is Travis Witherspoon from Carter Cow Capital, Carter Cow Trading on Instagram, Trade with Travis on YouTube. Hope everybody's doing very well on this Thursday morning. I have 7:03. Hopefully everybody's doing very well. Excited to be able to look at the charts, excited to be able to get started. Let's go ahead and go through the disclaimer. Then after that, let's go ahead and get rocking. So I'm not a CPA. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. I understand that Forex involves risk. That involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So with that being said, showing myself onto the screen, I can see that it's on, if I'm looking at YouTube, there we go, I see myself. On Facebook, I see that it's slowing up right now, getting there. Instagram, hey, how you doing? If you're watching on Instagram, you want to go to Trade with Travis on YouTube, make sure that you subscribe, make sure that you end up popping in from there so you can be able to see. Now, remember, going on, we are very close to this month's boot camp, our 5-day Forex boot camp. Very excited to be able to talk about what we're going to end up doing. So you believe in yourself boot camp. Once again, each and every month, what we end up doing at the end of the month is being able to teach people that are new or some people that have some experience, trying to find a little bit of an edge to be able to get started when it comes down to Forex trading. This is kind of like a way to be able to dip your toe in the water to see if this is something that you really want to be able to do and be able to have that outlet to be able to understand, okay, this is what it takes. Now, let's get into a point to where we can be able to learn it and go from there. We have 5 days. Each day is structured to where it's kind of like a college style program to where you can be able to understand and learn. It will go from 9 p.m. to 10 p.m. Eastern Standard Time each and every day for that whole week. So throughout the week, you end up seeing what's going to end up happening. Day one is Forex, a winnable game as you understand it. Day two is trading terminology. Day three, we're going to end up talking about brokers and charting tips, and we'll help you be able to get started with a broker. Understand the difference between U.S. regulated and non-regulated brokers and being able to understand margin leverage, which is basically your lifeblood of your overall account. Day four, we talk about return on investment. And then after that, day five, we talk about personal strategy and offer people a chance to be able to hop inside of a masterclass. Oh, excuse me. Sorry about that. Now, if you like what you end up seeing when it comes down to doing that, obviously I'm going to end up placing a link inside the description. The link is in the description if you end up looking at it from YouTube and on Instagram and on Facebook as well. It is bit.ly/believe in yourself Forex. Hop in if you have any questions. Obviously, you can be able to email me. And if you like the shirts or the sweaters or anything else like that, if you want to be able to purchase that and pre-order that, obviously, you can be able to do that as well while we end up going through it. So with that being said, let's go ahead and hop onto the charts. Let's see what's happening today. And then after that, we can be able to see if there's any type of trading opportunity. I know yesterday, there wasn't necessarily a trading opportunity. Last night, we ended up seeing that the U.S. dollar kind of started to pick back up just a little bit, but I think that's a little bit more of a retracement, and we end up going from there. So a little bit earlier today, Governor Bailey ended up speaking. We'll see how that kind of affects the pounds. They end up having good industrial trend surveys news when it came down to that, but that's not necessarily a high impact news. A little bit later on today, what we're going to end up seeing is consumer price index from the New Zealand dollar. So we want to see how this market is going to end up reacting to the CPI and seeing how it did in quarter three. And then after that, we have the presidential debate a little bit later on today. I don't know who it's going to end up being between. I think, this would be the second debate that they've had. And obviously the first debate in my mind was a debacle. But overall, if we just look at what's going to end up happening, know that the market is going to end up moving while they're talking. Know that the market is going to end up moving after they talk, depending on what's being said. So today is a fundamentals day because of that reason, but it's kind of spread out enough to where you can still be able to get and find good trading opportunities. I don't think that the market is going to be as volatile, but we do have to be able to keep that in mind when we're looking at it. All right. Now, with that being said, let's go ahead and hop on to the big three. If you don't know what the big three are, that is the U.S. dollar index. We end up taking a look at oil, and then after that, we take a look at gold. The reason why we look at those three is because they correlate very well with trading pairs that we end up looking for. The US dollar index correlates very well with US dollar pairs. We look at the Canadian dollar, correlates very well with oil. We end up looking at gold, it correlates very well with the Japanese yen and a little bit with the Australian dollar. So being able to understand what's happening with the indexes first will allow you to be able to understand what's going to happen with these smaller pairs in general. So it's kind of like a macro, micro approach when it comes down to being able to trade. All right, so if we look at it with the US dollar index, we can see that the market has been bearish. Was bearish, broke bullish, and then after that has broken bearish again on this counter trend line break that we ended up having. So with that being said, as long as this market remains to be below this actual purple trend line right here, in which I'm going to bold up by Friday, if it remains to be below that line, then the market, I believe, is going to be considered to be bearish. And from there, we'll look at bearish opportunities to be able to sell on the US dollar as we're going through. Now, keep this in mind. If the market ends up breaking below 11,867, then the market is truly considered to be bearish. But it looks like it's trying to find support right around this 12,000 area, depending on what happens today, depending on what happens over the course of the next few days. We'll see how this market kind of reacts. But the weekly is getting very close to the sell position as well. Now, we end up taking a look at this from a daily position. We end up taking a look at this from a daily position. We can see that the market is in that same area, very close to the sell zone. We have a counter trend line break, and it did break the A of the, well, I'm sorry. This market still has not broken the A of the first move, but it's almost about to break the A of the second move, which is at 11,963. So if the market breaks past 11,963 for this move right here, in which I'm going to show you a line right there, then the market will be considered bearish as well. But both of them are basically in a sell zone. Okay, now both of them are basically in a sell zone. Then that means that you're probably seeing more people actually look to sell on the dollar compared to buy on the dollar. So in this case, I'm going to end up considering this market to be bearish, even though it's still in the up ABCD swing. So if there's opportunities, my opportunities from being able to trade this will be to the downside if I'm looking at being able to trade this. Now, taking a look at oil. Oil played with us in a sense. Remember, we ended up taking the trade on, I believe that was Tuesday, when we ended up getting into the market right around 41.17, right around the 41.20 area. The market ended up pushing down, pushed right back up, broke out of the area, stopped us out, and then after that, pushed right back down inside of the actual consolidation area. Remember, there's two rules in consolidation. It is that you sell at resistance and you buy at support. Now, because of this movement right here, and because we end up seeing it when the market end up breaking this trend line again to the downside, that made us out of the market, that put us out of the market and not looking at it, because once again, we want to sell at the top of resistance. We don't want to sell inside of the buy zone. Anything else like that, if you end up doing any type of trade inside of this area, then what's going to happen is that you have a higher chance of being able to lose inside of this position. Now, keep in mind, anytime that you're looking at any type of consolidation trading, then that really means it's more like 50-50 trading. You want to look and see what the long-term movement actually is and kind of react based off of that overall movement. But anywhere inside of this overall area, and that's not a great color. Let's see if we can go with a different color. Anywhere inside of this overall area can, from a percentage-wise, is way more of a bad trade than it is a good trade. So you always want to end up getting it at the top of resistance or at the bottom of support. Because think about this. If you bought this at the bottom of support, you will still be in profit. If you sold this at the top of resistance, you will still be in profit. So what's the main thing that you end up getting there? You want to buy and sell at the extremes of that level. If you buy and sell anywhere inside of here, then more than likely you're going to have a bad chance of being able to, or you're going to end up giving away profits based off of that. So keep this in mind. What I will look for is this. I will want the market to be able to push up and try to see if it can get back up to the $41 mark. If it doesn't get up to the $41 mark, then it doesn't see my money. If it does, then I look for being able to take a trade as long as the market doesn't break out. Okay, so that's where we're at when it comes down to this trading. Quite frankly, we don't have anything. We don't have anything. It is what it is. Okay, so we'll go ahead and move forward when it comes down to that. Take a look at gold. Remember, we're still in the gold trade. Gold actually ended up falling down after hitting the highs of this high that actually ended up moving was, let me see if I can get a number. I know this thing is going to go down to 15. It probably might go down even lower. Let's see. The high ended up being 1931. As we notice in the 2-hour chart, this market is still moving through a it's still moving through a channel, a upwards channel within the spot. Remember, same deal, just like in any type of consolidation, the market is hitting support and the market is hitting resistance. So it goes your support, market moved up to a resistance, fell down to support, moved up to a resistance, fell down to support, has been lingering around in this area, making a new channel. And currently right now, if the market falls to where it is, it might end up falling down to support again before trying to break out. Now, if this happens one more time, and it does happen like that, in which I'm already in a trade, I will probably look to be able to take profit right here in this overall area. Currently, what I would like to be able to happen is, obviously, I would like to be able to sell at resistance and allow this market to get up to 1942, in which that's what my take profit area was. If I was so inclined to be able to get out, I would have got out yesterday right around at 1931 when the market tried to push out and could not break this overall area. Currently, right now, the market is in the buy zone. On the 2 hour, I will look at being able to look at a counter trend line break. And you can be able to get inside of this overall trade. You want to be way more cautious than anything else. I will wait for the market to be able to hit all the way down here if that happens again. Hopefully it doesn't, obviously, because I'm already in this trade. I'm kind of locked in on a couple positions. But if that happens, then we'll see that the market will push up, and then we'll see how it kind of reacts off of that. Especially if that happens and the market keeps on breaking and makes a new lower low, then I'll be way more interested in being able to probably even take profit, and then after that, moving on from there. Currently, right now, I'm up $206. So a little bit earlier yesterday, I was up right around 700. So I took profit on one trading pair yesterday, or I took profit on half of the position yesterday. I'm still in my original position. Probably going to end up moving my stop loss to my original position as well, just to be able to make sure that it is a free trade. But overall, remaining to be patient on this overall pair. The reason why I'm remaining to be patient is that a couple things. If we end up taking a look at volume profile, you don't know what volume profile is, this would be a great time to be able to once again make sure that you hop inside of our bootcamp class and be able to see and be able to learn from that actual be able to learn from everyone else, be able to learn from me and everything else like that from there. Let's see. We look at volume profile, what we end up seeing with this market end up breaking out of this consolidation. But on the 2 hour, we can also see that this market is just basically finding support at the 200 moving average. I mean, the 50-day moving average. It found support there the first time, bounced up, and then popped up to the upside. Right now, the market's in the buy zone. We don't have that counter trend line break as of yet, but we see that we have a lower amount of volume when it comes down to sellers. Now, keep in mind, I still believe today it's going to end up being one of those situations to where we'll see, we'll probably end up seeing a little bit of a retracement, and the dollar is going to get a little bit stronger. The reason why I think the dollar is going to get a little bit stronger today is because it fell flat on its butt yesterday, right? So the market moves in waves. The market moves in uptrends and the market moves in downtrends. One day it may be very weak. The next day it may end up basically retracing, but it's as long as it doesn't do as well as the first day when it comes down to overall movement, as long as the market is making, in our case for the US dollar, lower lows and lower highs, then there will be times where the market will end up giving you opportunities to be able to get in. This is one of those opportunities to be able to pay attention to and be able to get in if you're looking at being able to get into this actual spot. Because once again, we buy low in the buy zone, right? Buy low in the buy zone, we sell high in the sell zone. We get those opportunities, and after that, you have trading times where you can get into the market. Now, once again, as a trader that's already in this market, I see a low volume profile that's right around this 1916 area all the way up to 1942. Now, we go back and we take a look at previous data. We can see that there's a point of control at 1944. So what's happening is this market is slowly grinding up to this 1944 area. Now, I'm patient enough to allow this market to be able to keep on moving as long as it keeps on moving in a uptrend. If the market ends up breaking the downtrend to the downside, then I am going to end up taking profit. It may not necessarily be the greatest win in the world, but at the same time, that's the reason why you take trades, and that's the reason why you end up putting yourself in the market anyway. You're trying to see if you can be able to get a return, right, and being able to go from there. So keep this in mind. That's what we're looking at for this overall up channel. As long as everything remains to be the same, if gold starts to get a little bit stronger, if the US dollar starts to get a little bit weaker, and we're going based off of the pattern, then we should see that this market should hit 1942 in due time. Okay, so that's where we're at when it comes down to that. Now let's take a look at the NASDAQ 100. NASDAQ 100. has been working in consolidation. Quite frankly, this is a consolidation trader's dream because the market has been hitting support and has been hitting resistance, and it has been doing it within the overall day. So you could be buying in 1 hour, and you can be selling in the next hour, and you'll be right overall because the market has not made a decision for its overall movement. Now, let me explain why that movement has not been made yet. The reason being is because if we look at what's happening with the daily, we can see that the market is basically going through a overall crown formation. All right, meaning that this market is considered to be somewhat bearish. So the weekly is retracing to the downside, and the daily is basically showing that movement of that retracement to the downside. The point of control of this overall movement is at 11,248 on the weekly. Okay, well, I'm sorry, 11,372 on the daily, which would mean that the market will fall all the way down to the deep 8.6 if the market continues to move bullish. Okay, well, that means that overall the market has been falling, but there's support where the market could be, where people could be buying at this particular point in time. Okay, well, let's go to the daily. Let's see what's happening with the daily. And daily is getting closer to the buy zone. Okay, we can see that less people are actually buying in this area, and we can see that a lot of people have been basically buying up at the 618, basically trying to get into this position in a sweet spot area. If this market breaks a counter trend line break bullish, then we'll start to see that this market will start to try to move up to 12,911. If it does break past 12,911, then that means that it breaks the overall crown fib, and that means that the market is going to end up being bullish. This gives us a good trade to be able to take a look at, not necessarily today, but actually going into that Sunday to Monday type of trade, where you're trying to find a counter trend line break and you're trying to get in with a very good stop loss and allow the market to be able to move. What I would pay attention to is this: because the market is moving inside of the buy zone, once this market ends up breaking a counter trend line, and I'm going to put this, I'm going to sync this onto the 2 hour. If it starts to push up and break this trend line, and we end up having a couple candlesticks that are above that, then I would be interested in being able to buy up to 12,911 because we can see that the market getting closer to the buy zone. We've seen that on the 2 hour that we're getting a lot of support within this area, and quite frankly, there goes your counter trend line break right there. If we're looking at it and we're being very honest. I would have to adjust it a little bit because I don't like, we want to be honest about this overall move. We don't have confirmation yet. The confirmation will happen once the market breaks past, let's see. Okay, so there goes your trend line right there. We'll move this trend line up here. The market will have to break this level right here before considering to be bullish. So we're still in that consolidation area. But once this market ends up breaking past this overall area, retesting and giving us an opportunity to be able to buy, I will be very much interested in being able to buy. Until then, the market is still considered to be in the bear zone or the sell zone at this particular point in time. So we want to trade this off of confirmation. We don't have any confirmation as of yet. If you're trading this based off of saying consolidation, then yes, you can probably be able to buy it back up to this level right around 11,760 and see how the market basically moves from that overall area. Because that'll end up being past support turning into future resistance. Now, if you would have bought it right around 11,621, right around 9 o'clock or 10 o'clock last night, then I would have been a very good position to be able to buy up to. But once again, in my mind, I think that's diminishing returns just because we don't know what's going to end up happening. We would have traded this a little bit earlier like this yesterday and got into all of that support, or got right here at the resistance, sold down support, and did the same thing for the last few hours, then yes, that would make sense. I don't think that we're just going to have a full day of consolidation again, just like that. That's just my personal opinion. That makes me actually get out of the market when it comes down to this right now. Okay, so let's go back to what we know. We know that the U.S. dollar index is expected to be bearish, but right now we're going through an overall phase to where we should be paying attention to the move. We see that the U.S. We see that gold is basically retracing, but it's still basically a bullish move, or we expect it to be a bullish move. So we should be looking at the U.S. yen at the first trade on being able to get into. The reason why I say the U.S. yen at the first trade, because it makes natural sense that if gold and the U.S. dollar is weak and gold is strong, then we want to look at a pair that's going to end up basically pushing that overall pair to the downside. Now, here's a good thing. We can see that the market is in the sell zone off of this pair right here. We were talking about this a couple days ago, and we was hoping that this market would end up breaking below would actually give us a chance before breaking below 104. This market has hit a low of, let's see, what was the low? The low was 104.41. This market has had a couple chances where it has broken or tried to break below 104 and has failed. So we need to keep that in mind. If we go to the daily, we can see that this market tried to break past 104 right here and tried to break past 104 right there and was not able to be able to do so. We also see that the market is in the buy zone, so it's not necessarily giving us a very good entry on being able to take this pair if we were trying to sell it. But overall, if we look at what happened yesterday, we had so strong, or 2 days, well, yesterday, we had so strong of a move to the downside that we have to be able to look at the market trying to recover just a little bit on this overall move. I am interested in being able to sell. The question is, are we in a good position to sell right now? I would say we're not. But if you're a scalper and you want to trade based off of this counter trend line break and based off of a 2-hour scalp move, then that would be something that I would be interested in being able to do, as long as I end up lowering my risk. I wouldn't go, this wouldn't be a 5% trade. This wouldn't be anything else like that. This would probably end up being a 3 or 2% trade, just to be able to kind of test the waters and see if the Japanese yen is going to be stronger than the US dollar. As long as the market gets right around that 105 area, if we can get it close to that 105 area, then I'm very much interested in being able to sell it. If not, then obviously we'll be able to trade it based off of whatever move we can be able to get. I'm going to cut this wick. The reason why I'm cutting this wick is because the market quickly got pushed back up to the upside. So what I'm looking at this, kind of like what we ended up talking about on Tuesday. Market broke, well, yesterday, market retraces. I want to sell it right here. We can get that and then look to be able to sell down. Then I'm interested in being able to do it. The market is in a sell zone, so keep that in mind. But that will be the type of trade that I'll be interested in being able to get into if that does play itself out. Okay, so that's where we're at when it comes down to that move. So US yen is close, but it's not there yet. Euro, United States dollar, looking at being able to buy on this overall pair. This market has recently completed a de-extension off of a move. We talked about that a couple days ago for being able to get into this pair. Since then, it has retraced off of this move. The next de-extension is expected to be at 1.1982. I am interested in being able to buy. We've got to see if the market gets into the buy zone. We have this upfield move right here. So this market is considered to be bullish on this overall trading pair. So not necessarily in the buy zone, but it is considered to be bullish. If we look at the overall move to the upside, there's a de-extension expected to be at 109.28. So I will look at being able to trade the 109.28 based off of where we are. Currently, the market is at 108.23. So that leaves us a little bit of room to be able to buy up if it keeps on going up bullish. That's about 85 pips from where we are right now. We look at the 2-hour. The question is, can we get into a solid position? Market is in the buy zone right now. What I will look for is a counter trend line break bullish, and then after that, trade it to the upside. Now you have to keep in mind that we have a inner and an outer trend line that is happening. So this market could fall, could keep on falling. Once it breaks out of this overall position, then we have to be aware that it has to break past this overall area as well before being truly bullish and pushing up to the upside. Okay, but that would be a trade that I'll be interested in as well if we're looking at buying against the dollar. Okay, so Euro, United States dollars is in a position to where I'm looking at being able to buy as well. Let's take a look at the pound. Let's see how the market kind of affected off of the pound a little bit earlier today. Same deal. Market hit a de-extension just a little bit earlier. Market is back in the buy zone. Market roared up for the last couple days. Rolled up about 242 pips. Obviously, the natural thing is that the market is going to end up retracing. Let's see what's happening off the 2-hour, and let's see if there's a position to be able to get into. Let's see. We're looking at this from a 2-hour. We're looking at this from a daily perspective. The market is not in the buy zone as of yet. I am interested in buying, but it's not in the buy zone as of yet. The extension for this move is expected to be at 1.3845. If we look at it based off of the crown fibs, we say that the market is going to expect to go to 1.4461. I mean 1.47761. If Brexit talks end up having any more good news, then we're going to see that the market is going to continue pushing up bullish. Now it's going against the backside of a trend line again. So if it breaks this trend line one more time, in which I'm going to make it solid now, then the market is truly going to end up being considered to be bullish because that was based off of a counter trend line break almost a month ago. So that's where we are when it comes down to that point. 2 hour, I would look at same deal. Allow the market to be able to fall. If it gets into the buy zone, I'll look at being able to sell it. I'll look at being able to buy it from there. But here goes your outer trend line. Market has to break that outer trend line before even thinking about looking at being able to buy. In my case, on this overall position. Let's see. So pretty much all of them are showing the same positions. Pretty much all of them are showing the same thing. Let's go to the currency strength meter and see if there's anything that we can look at for us being able to get in right now. Like to be able to get into a trading pair right now if we could. I can see that the New Zealand dollar and the pound. New Zealand dollar is the strongest pair right now, and the pound is the weakest pair. Let's take a look at the pound New Zealand dollar to see if there's any opportunity on that trading pair. Maybe we might be able to find a scalping opportunity. Now, typically because the market, because the London session opens up at 2 o'clock and it really gets ramping up right around 3:30 to 4 o'clock, this move has probably already been made. But something to be able to pay attention to. We want to look at being able to sell on this actual pair if we based off of what we're looking at on this actual chart. So let's see. I don't like what I'm seeing already off of the daily, but actually that's a good, let's see. We go based off of the weekly. We can see that this market has been moving bearish, which means that long term the market has been moving to the downside. We can see that this market has been finding support right around the 192, 190 area, and the market has been pushing to the downside based off of that. Let's go to the previous fibs and let's see what's actually happening based off the weekly and the daily. See. So overall, market is expected to drop at some point at 1.5425 at some point. That's not, I mean, we're looking at this off a monthly chart, so this is a very long time. But the biggest position that we need to pay attention to right now would be this area right here. So we can look at where we're going to place it in on a weekly. Okay, so go to the weekly. Currently, this is the field that we're at on a weekly. Market is doing a retracement. We're looking at being able to sell, obviously. Market is going through this swing right here. We have a to B. It goes out C. They end up happening all the way up here. A D extension that looks like it was a blue. Let's see. Okay. Market, if it keeps on falling bearish, will end up falling to the what area is this? 1.6928 area. 1.6928 area. That's the weekly D extension off of this move. Let's see. $1.6920. Okay, so the market does continue to fall in the way that it's doing, then that would be the move that we're looking at. Obviously, want to look at this move right here and kind of figure out what's going on with the daily. And let's see what's happening off of this. So, market based off of this is expected to move down to 1.8737. That the market is continuing to be bearish. based off of a daily swing, which will end up being down here. Currently, right now, the market is not in the sell zone, but we are hitting against a slight resistance based off of this pair right now. What I would pay attention to is if the market doesn't break above this area and then breaks a counter trend line break to the downside, then I'll be interested in being able to trade it. Kind of hard to be able to say that we want the market to fall almost another 200 pips before actually breaking the actual outer trend line. But if we go based off of this, the way of being this trained, and then that's what you'll look for. You want to look for it a little bit more aggressively. Then I'll look at a breakdown in this area. If that happens, then after that you have a trade. The market is not in the sell zone, so there's really no trading pair to be able to get into right now. Once it gets up here, then after that I'll be interested in being able to sell it. But for today, I think that's just a move that's just happening within the actual wave of the move right now. So that's where we are. That's what we're looking at right now. Obviously, the trading pair that we're in right now is gold. Gold is actually taking another drop down. It's in the buy zone, so obviously we want to see how this market kind of reacts to the 50-day moving average. I've been in this pair, and I've been up in this pair. I'm giving away some gains just to be patient to see how this market's going to move. It has another opportunity to possibly be able to move back down to 1,910. If that happens and it keeps on moving to the downside, then I will look at being able to take profit, because more than likely what will happen is it'll continue to fall, or basically fall at support right here at 109. If it breaks support at 109 and keeps on moving down, because of where I'm at, I will make money. I won't make the money that I was expected to make, but I would make money. It'll be aggravating, obviously, but that'll be something to be able to pay attention to. But you like what we end up doing today? Obviously, no trading pairs this morning as of yet. But we're going to end up keep on looking at being able to find some. Remember, the NASDAQ 100 is going up to resistance again. I think that overall, if we're looking at being able to trade on a pair, that will probably end up being one of the quicker pairs to be able to get into. If you're a support and resistance trader, I would kind of pay attention to that one. But remember, there's a little bit more diminishing returns when it comes down to that pair. I will look at that. But you like what we end up doing? Once again, please make sure that you like the Carter Cow Trading business page. Please make sure that you end up subscribing on Trade with Travis. Remember that we end up having our boot camp October 26th to October 30th. Remember, it's going to end up being basically an hour a day, so 5 hours of overall learning in a college-style system, being able to learn exactly how to be able to trade, being able to get all of the tools necessary to be able to be successful, and obviously being able to have a community behind you when it comes down to trading. If you're interested in being able to do that, you can go to the link bit.ly/Believe in Yourself Bootcamp. So you can replace that inside of the link as well. Once again, this has been another Trade with Travis episode. Obviously, if there's an opportunity or any type of trading opportunity, you can go to TradingView as well and see if I actually end up putting up an idea. Sometimes I end up doing that as a way of being able to let everybody know the updates on what we end up doing as far as our live class, and be able to go from there. But like always, make sure that you end up planning your trade your plan. Always believe in yourself. Once you end up doing that, change will end up coming. Inside of the chat box for both links is the actual boot camp. So there you go. You could be able to hop in and be able to go from there. Literally, it's $20 a day to be able to get all of the education from somebody that's been trading for about 5 years now and been very successful in being able to do it. All right, everyone, I'll see y'all and tomorrow. Remember, tomorrow's Friday, so we probably might have a light day, but we'll see how everything kind of plays out. Take it easy.